Greetings, guys. This is King Solomon, and in today's video, we're looking into trading fair value gaps. So this video is going to perhaps be a short one, but I'm just going to show you a simple model that I use to trade XAUSD and my crypto pairs, which are BTCUSD and ETHUSD, right? So there is no much hard thing in here. It's just really straightforward. I think I've dropped a video like this before, but it's kind of different. So this one is giving the vibe of the fair value gap from the higher time frame, right? And looking at this, you can see how that we had a 4-hour fair value gap, right? And then thereafter, we can see a break of structure to the downside thereafter the formation of the fair value gap. So the first criteria on this model is the break of structure after a higher time frame fair value gap, right? Most times I use the 4 hours time frame fair value gap, and sometimes I use the daily, right? But I believe that the lowest I go for my HTF POIs are 4 hours. So when this is marked, when I see the first break of structure, I do anticipate a tumultuous market, right? How that the market is going to range. If it's going to be a sell from the FVG, we're going to see buy side engineering liquidities, right? And if it's going to be a buy, we're going to see sell side engineering liquidities. In this case, we can see how that price came close to the FVG, right? We can say induced it. We're not going to use induced, we're rather going to say engineered around this because price started ranging, right? It came down here following this path that I drew, came down here again, went up, came down here. And that's why I marked this high as my buy side liquidity. And thereafter we add price, break the buy side liquidity and tap into the HTF FVG, right? After this, what do you want to see? Sometimes I do take direct trades from here, but lately I've been putting my hands into pockets for lower time frame confirmations, right? So it simply means you want to see a change of character, market shift thereafter your higher time frame FVG mitigation, right? And in this case, we had a change of character. So going back from what I said earlier, the first criteria is what the higher time frame FVG. The second criteria is a break of structure just after the FVG. The third criteria is a tumultuous market, right? Market looks like it's going sideways and very disorderly, right? Disordered. So thereafter, I think the fourth criteria is a market shift after the mitigation. So something I do notice is that when I'm trading Ethereum or Bitcoin, this confirmation entry dumps or pumps really hard, right? If we are looking at a short setup, you're going to see price dump so bad to take out the change of character. It will dump so bad that you would perhaps think that it won't come back for the POI, right? So when I see price dump so bad like that, then it's like an A+ criteria for me, right? So what you want to do is you go to the 15 minutes or the 30 minutes time frame to pick another block, right? I mean, I'm not going to go into the liquidity formation right now, but then you know that you have to pick your blocks in respect to liquidity. So I mean, if there's a liquidity around, I'm going to use my marker right now. Let's say there's a liquidity around here, and then there's a dump, right? What does that tell you? That tells you that this is simply the buy side liquidity, and price might want to go with this mitigation block, or should I call it breaker block, right? So, but in this case, if there is no defined liquidity, you want to bet on price coming back for this extreme POI, right? In the case of this dump, your order block is going to be the last bullish candlestick, right? So you're marking that out and you're taking your trade from there. Enter at this point, your SL perhaps above here. So when I'm trading Bitcoin and Ethereum, I do give my SL some space. My SL is always like around 35 to 40%. No, I think 30 to 35% of my main SL. So let's say year to year is 100%. I'll still add like some kind of 30% upward. So in case price wants to snipe it a bit, I'm not going to get stopped out. Or in the case of, slippage or market faults, right? I'm not going to get stopped out of that trade. So you're taking your short entry from here and you're targeting where? You're targeting this sell side liquidity. Of course, you know that the sell side liquidity is the last point that price got to before we came for the mitigation of our main POI, right? So this is the sell side liquidity, and this is where you're going to target. So if you're actually looking to take partials, then I think the first partial is going to be at this internal sell side liquidity. That's going to be the first partial. The second partial is perhaps going to be at the low of the buy side liquidity, right? Something like this. And then your final TP is going to be around there, right? So if you see those that give tip 1 to TP3, that's how they pick their target prices, right? You shorten, you want to pick your sell side price levels for partial profits. They get that. So, but if you're someone that takes the trade to final target, then you're betting on price coming to take out this sell side. And I mean, trading Bitcoin and Ethereum for a while now, I've really seen price to always take out this low, right? And then there's something sweet that happens thereafter. If I take a trade like this, I don't anticipate an RTO, that's return to order block. So there is most likely going to be a return to order block like this. You're gonna see price come back from this low, come back to the closest to valid price delivery area around, and it's also going to dump again to this final point, right? I think I know someone who does not even take this kind of trade. He just waits for price to take out the FVG, take out the sell side liquidity, then is now going to, take the new trade from this point or wherever the valid zone is, right? So that's just simply the model. I'm going to show you maybe one example on my chart, perhaps a trade that I took lately, right? That looks just like this. Here is a very nice example of this model. Isn't it very clean? Looking at this FVG, right? This is Ethereum USD, by the way. So of course you can mark your FVG, which is the low of a first candle to the high of a third candle, right? If it's in the case of a short, and then inverse for the case of the long setup, right? So I marked my 4-hour FVG from here, and I went down to the 15-minute time frame. Follow very closely. Now, this is the first break of structure that I definitely want to see. So we're going to mark this as a BOS, right? As a break of structure. Thereafter, what can you see from here? You can see how that price came very close to our 4-hour FVG, right? And what did price do again? It dumped to take out this low, So in the example I gave you, price did not take out this low, right? But then any of them can happen. Price can either take out the low or not. Personally, I prefer when price takes out the low because it gives even more traps, right, for those that are going to be selling from their assumed supply zone around here, right? But we that we have the knowledge of this individual simply going to see how that it's a trap for these early sellers, right? So this is going to be our sell side liquidity. I'm just going to use this SSL, right? No, I don't want to use this. I'd rather type it out in full. Sell side liquidity. Going to use it. So this is the sell side liquidity at first, right? But we can say the price already broke it. So I should even make this a sell side liquidity. I should just make this a POS. I'm pretty sure some of you already thinking that no, this is a POS. So this is going to be BOS instead of a sell side liquidity, right? And thereafter, we can see how that price came to this fake supply zone. You can see how these traps have been set in the markets, right? This is very, very practical. So price came into this supply zone trap, to this trap supply zone, and price is selling off already. So people who are shorting from here are most likely targeting this low as their sell side liquidity. But I and the price has other plans to take this eye out and tap into this 4 hours FVG, right? And so price came close to their TP and did what? Reversed to take them out, and then came here to mitigate our own point of interest. So of course we want to go to the perhaps 3 minutes time frame to see if we could have gotten a trade. Looking at this marking, this one definitely did not have the dump change of character, but I mean you can still see that you can still use these candlestick highs and lows to determine or to know that you already changed character. So looking at this, I just started marking my point of interest. So from here I can see that this bearish candlestick is a supply zone, right? So price came down here and then I took a short from here. I took a shot from here with my TP just above here, right? Also, no, I think my TP was here because I was, in fact, thinking, not really hoping, but I was guessing the price might want to come for this POI, so I just want to play it very safe. So I had my SL at this eye, and then my TP was where at this sell side liquidity. All right, that was a 3-hour trade, right? And then it did TP in how many minutes? This was 1:45 to 3:15, right? So that was around 1 hour 30 minutes. So this was a very fast trade for me. And then what I was telling you guys about those who don't take this particular trade would rather wait for price to come back for an RTO, right? I would say they picked their point of interest from the 15 minutes time frame. So you can see this bearish candlestick just before price came to clear this sell side liquidity, right? Marking a strong supply zone at this eye, right? Now this is your sell POI, this is your supply zone. Now you can start looking forward to shorting from here as well. And then price even give us something very sweet, all that we add an inducement, right, close to our point of interest. So I'm going to mark this as an IDM, all right? Yes, an IDM. So price came for an inducement and went back to break the low. What does that tell you? That tells you that this guy is a very strong guy, and you can just put it as, A plus setup. Did I take this second trade? No, I did not. Why? I I was not on the chart, right? At that period of time. This is the 15 minute time frame. Oh, I was actually on the chart around the year, but then I did not analyze this. I actually saw it though. But then this was a 5 hour trade, and this was very easy to. Perhaps this very strange move was like in news, right? This is like 3:30. So I think this was like a PPI read news, which caused this very disordered price action. But then yeah, you had your 5 hour trade very smooth. So this is how the model really works, from the higher time frame FVG, you check for your first BOS, right? Then you look for price engineering just before your FVG. Then you wait for price to mitigate your FVG, taking out all the side liquidities. Then you wait for confirmation entries, or you wait for the same market structure, uh, the same market structure move, right? You want to enter from a AI time frame POI, right? Perhaps the 15 minutes, 30 minutes, or 1 hour, right? And then you're going to have this as well. So 80% of my trades on Ethereum and BTC USD looks like this, I promise you, right? They look like this, and that's why I actually came back to trading BTC and Ethereum, and I can say I have even better win rate on BTC and Ethereum than my gold and GU, right? Perhaps the same thing. That's going to be all for tonight. I'm going to drop a trade as well very soon on another model, right? Not this model, of course. So go to share and follow me for more premium trading content. See you guys in the next video.